Hey folks, Larry Berman here, and here's what's on my radar this week. Well, as we've been talking about for a little while now, the markets were really well set up for an oversold rally, and that's what July brought. A lot obviously focused around the Federal Reserve, inflation, and what Powell had to say at this week's FOMC meeting about the go forward, and he handled it in a very Goldilocks way. There were some reports out on Friday that large trend following hedge funds were forced to cover. There was a massive amount of short covering evident in a lot of the data that we can kind of see from the futures market perspective. And so to what extent that continues as we get into August and into the summer months will be, of course, telling for this market environment. From a bounce potential perspective, there's obviously a little bit more room to go. But when I look at the big leaders of Apple and Microsoft, there's an awful lot of overhead wood to chop there in the semiconductors, et cetera. That probably, limit the upside. So let's have a little bit of a dive into the charts this week and see a bit more what's on our radar. So here's the Fed funds curve, and we've shown this, or the euro-dollar curve, in recent months in terms of expectations. So the green curve here is the live data that's pricing in the current market. Orange is a week ago, so what we saw before the Fed, and the blue is a month ago. And what we can see in July and for the last month is that, rate hike expectations a month ago that were expected to peak around the April contract has now brought forward to the January contracts. And it looks like by the end of the year, and what Powell talked about when he was asked in the press conference about the terminal rate, somewhere between 3 and 3.5 based on their projection is where they thought they would be at the end of the year. And that's kind of what the market has now moved towards. So the Fed guidance, the Fed's now in line with the curve. That's provided a lot of relief from a market standpoint. But, have a look at this. So this is a chart on inflation expectations, the 5-year forward swap. Again, a very important metric that the Fed likes to look at for long-term inflation expectations. And while by no means has it broken out what happened post-Fed, and that is the movement right here. And so longer-term inflation expectations have started to inch up again, where they were coming down in July, providing a lot of impetus for the move up. What we saw in the PCE numbers of GDP that came out late this week is that core inflation is actually ticking higher. And again, when Powell was asked what's most important, that core PCE and PCE overall as what they look at versus the CPI. So we've got a couple weeks to go before we see the CPI numbers for July, but the Q2 PCE, a bit higher than markets were looking for. So we think there's a lot of month end, buying, short covering here, and not sure what it's going to mean if, on a go forward. A couple of the names that we've been trading, TEVA Pharmaceuticals. So here's a name that we go back far enough in the opioid crisis that has really taken hold. Trump starts talking about it in here, gets elected. TEVA announced this week that they're going to settle for about $4.25 billion. There's been rumors of all the settlements for a while here on the opioid, but it just came out a couple of days ago. Stock rips higher. This is a name that I've been trading for a couple of years now in the portfolios. it gets oversold, a lot of bad news gets priced in, get a relief rally, can't get out of its own way. This stock probably should be mid-teens to $20, but because of this overhang has been tough. So in recent weeks, I've been adding to it under $8. It became a big part of my portfolio, almost 2%, which is a big weight for us in our stock portfolio, where we're targeting 0.5 to 1. I actually cut it into the strength today. Good potential for this stock to get back into the upper end of the ranges. So, if you want to trade that, I kept 0.5% in the portfolio for that kind of move. It looks kind of interesting to me. Where else did I cut this week in the portfolio? Boeing. We really like Boeing on the decline here into the 120 area. Was adding to it a lot in recent months. Today, cut that position out of the portfolio. Now, why did I do that? Well, here's a name that's going to be very sensitive to the economy. Obviously, a lot of the reason why it's already backed up. But a name like this has a pretty good chance of a retest here, and certainly back towards 140. So trim that position today, pretty much near the highs of the day here, and we'll look to buy it back on weakness. So it's a name I like. It's got a price target around $200. So I want to buy dips, but we were trimming it. Here's a name in terms of the bull and bear picks of the week where we added to in our ETF portfolios, ZMT. So while on the bear side, and what I've liked in recent weeks are the Qs around 280 and lower, where we were adding to on the portfolio, I'm now trimming out the Qs and I'm replacing it in part with exposure to the base metals that have absolutely got pounded in recent weeks, and now looking to make a bit of a bottom here. We should have another run up. Now, again, you might talk about this being economically sensitive, and I would agree completely in that lens for sure. But a lot of that bad news in terms of the downturn in the economy and the copper names and the steel names all starting to act a little bit better in the last couple of days here. So adding to that, subtracting from the Qs, as you can see, a little bit more upside potential there before it starts running into a lot of resistance. But there's an awful lot of wood on the Qs to chop through here for a much more meaningful rally compared to what we see in the base metals. Have a great week, everyone.